Kaspa's sitting at 5 cents right now. Big wallets are buying at 10 cents. Yeah, you heard that right. They're down 50% and they're still accumulating. Meanwhile, retail holders are sweating bullets watching their portfolios bleed. So what do these whales know that you don't? Today, we're diving into Kaspa's brutal price action, the wallet data that'll blow your mind, and whether this is your last chance to buy cheap or a trap that'll wreck your portfolio. Let's get into it. What's up, crypto fam? Welcome back to the channel. If you're new here, I break down the crypto market without the BS, just real analysis, data, and a healthy dose of reality checks. Hit that like button right now, smash subscribe, and turn on notifications, because Kaspa's about to make some serious moves and you don't want to miss what's coming. Alright, so Kaspa. The community loves it, the tech is solid, but the price? Absolute carnage. We're talking a slide from 10 cents in August all the way down to 5 cents today. That's a 50% haircut in just 4 months. Every bounce gets sold, every rally dies faster than my New Year's resolutions, and the chart looks like it's practicing limbo. How low can you go? According to data from Dilsa Crypto, Kaspa's holder distribution tells a fascinating story. 72% of holders are retail. That's your everyday crypto enthusiasts holding between 100 and 100,000 Kas tokens. 27% are what we call strong hands, mid-tier holders with 100,000 to 10 million tokens, and just 1%? Mega whales sitting on 10 million plus. Kaspalens recently dropped some wallet data that should make you stop and think. Wallet number 1? Average entry price of 10 cents. Wallet number 8? Entered at almost 8 cents. Wallet number 9? Over 9 cents. These aren't small fish either. We're talking massive accumulation accounts that are currently sitting on losses that would make most people delete their crypto apps. So why would sophisticated investors buy Kaspa at 10 cents, watch it crash to 5 cents, and not panic sell? Are they just really bad at trading? Spoiler alert, they're not. These wallets don't accumulate tokens for fun. They're playing a different game with a different timeline than your average trader scrolling Twitter at 2 a.m. The technicals right now, not pretty. The chart's been making lower highs since August, which in trader speak means sellers keep winning every battle. We saw a brutal flush in early October when KAS briefly touched 97 hundredths of a cent, yeah, nearly a penny, before bouncing back. That liquidation event wiped out leveraged longs faster than you can say wrecked, but the recovery stalled at 6 cents before rolling over again. Right now, KAS is hovering around 5.3 cents after a tiny bounce. According to long-term R's technical analysis, we've got a potential bullish breakout and retest pattern forming on the 3-day chart, with price stabilizing above 5.3 cent support after breaking a descending trend line. Sounds hopeful, right? But the market's not convinced yet. Each attempt to push higher gets smacked down like the market's playing whack-a-mole with your dreams. Open interest has been flat since October. That means traders aren't opening new leveraged positions. No new fuel for big moves. ATR is compressed, volatility is low, and the CCI indicator bounced from oversold but still sits below neutral. Translation, the trend still leans bearish even after the bounce. But wait, there's more bad news. On-balance volume has been falling steadily since August, showing sustained distribution. Even when price bounces, volume doesn't support a real reversal. It's like trying to inflate a balloon with a hole in it. Sure, you can blow some air in, but it's not staying inflated. Despite the brutal chart, Kaspa's fundamentals are actually improving. On December 4, 2025, KS pumped 19% to 5.7 cents after the Kasplex Layer 2 upgrade went live, bringing full smart contract functionality to the network. Some analysts are even more bullish. The Kaspa Coins account on social media shared a power law model predicting Kas could hit $1.60 by December 2026 if it follows its upper resistance band. Now, power law models use linear regression on logarithmic scales to project long-term trends, and similar analysis on KaspaPowerlaw.com estimates Kas reaching $1 by mid-2026. Let me be clear with my opinion here. Power law models are interesting for multi-year projections, but they're not crystal balls. They work until they don't. However, the technological upgrades are undeniable. Smart contracts, futures market access, new exchange integrations. These are real catalysts that support long-term growth potential. But there's a reality check we need to address. Kaspalens posted a liquidity analysis showing what happens when 2 major Kas liquidity walls get absorbed. Where does the market look next? Downside liquidity pools. Their heat map chart shows swept buy orders and the resulting bearish sweep, illustrating how smart money hunts liquidity. This is advanced market mechanics. Big players need liquidity to fill their orders, and sometimes that means pushing price down to where stop losses cluster before reversing higher. So what's actually happening here? The big wallets buying at 10 cents aren't worried about 5-cent price action because they're not trading. They're investing in a multi-year thesis. They see Kaspa's proof-of-work security model combined with smart contract functionality as a potential game-changer. They're betting that a fast, scalable POW network with smart contracts fills a niche that neither Bitcoin nor Ethereum fully occupies. Meanwhile, retail is doing what retail always does, buying tops and selling bottoms. That's 72% retail holder base. Many of them probably bought between 7 and 10 cents during the hype phase and are now underwater watching their portfolios bleed. The emotional toll is real, and that's exactly when big money accumulates more. So, the technical setup for this week is, honestly, pretty straightforward. If KS drops below the 4.9 to 5 cent zone, we could end up testing those October lows near 1 cent, although yeah, that would probably need a broader crypto market meltdown. Now, the more realistic downside target is sitting around 4.5 cents, which is where previous liquidity built up. That's the spot where stop losses tend to cluster, and honestly, that's where smart money might decide to add more if we actually get there. On the other hand, KAS really needs to reclaim 6 cents to prove that buyers are taking back control. That level has rejected price multiple times and acts as the key resistance separating this consolidation from a real reversal. A close above 6 cents could trigger momentum towards 6.7 cents this week. But here's the thing, volume and open interest need to increase for that move to stick. Without fresh capital entering leveraged positions, any rally remains suspect. From a risk-reward perspective, buying CAS at 5 cents with big wallets accumulating at 10 cents creates an interesting asymmetry. If their thesis plays out and Kaspa captures even a fraction of the smart contract market, current prices look absurdly cheap. If it fails, you're catching a falling knife alongside some very expensive company. That's the gamble. Look, I'm not here to tell you what to do with your money. I'm here to show you the data, the technicals, and the wallet behavior so you can make informed decisions. Kaspa at 5 cents with major wallets accumulated at 10 cents is either the opportunity of the year or a value trap. Time will tell which one it is. What I do know is this. The fundamentals are improving. The technology is delivering, and smart money is accumulating while retail capitulates. That pattern has played out profitably many times in crypto history, but it's also failed spectacularly in others. Your job is to assess your risk tolerance and position size accordingly. If you want more deep dives like this, check out my other videos on altcoin. Did this analysis help you understand Kaspa's price action better? Smash that like button, drop a comment telling me if you're accumulating or staying away, and subscribe because we're covering the entire crypto market every single week. I'll see you in the next one. Quick reminder before you go, this video is for educational and entertainment purposes only. Nothing I say is financial advice, and you should never invest more than you can afford to lose. Cryptocurrency is extremely volatile, highly speculative, and you could lose your entire investment. Do your own research, consult with licensed financial advisors, and understand the risks before putting any money into crypto. Stay safe out there.